Everybody, good morning. Morning. And once again, I forget my headphones. Just realized. Anyway, how's it going? Make sure you're a subscriber. Make sure you subscribe. Hit the button over here. And a few seconds later, you can subscribe and be on the live chat with like Philip, George, Larry, Don, PD, Ray, Gary, Sergio, Francois, Rungamer, Ben West, Nikki, David, Hawk, Al, Terrence, Donald, Maurizio, Ted, Jan, Merle. Morning, everybody. Arturo, Laura, W. Wong. Don't recognize your name, but hey, welcome. Cliff, Pat, Darren, Harry, Goose. My lovely wife, Kimberly, is here. She's alive. She's feeling better. Um, we suspect maybe, for those of you in the VIP group, she had she was at the doctor with an allergic reaction. We think maybe it was from the cat who ate the cat food and, gave itself a bath, and then she gave it a hug and possibly got soy all over her face. But, she is like anaphylactic allergic to soy. For those that say soy is hypoallergenic or whatever, Kimberly would argue otherwise. Nice shot of She got a shot of epinephrine and took a long nap and looking better today, but still not 100%. But she's still alive. Anyway, hey everybody, and Sledge, Brian, Jason, Valerie, glad to have everybody. Mark. Anyway, so Bitcoin is the gift that keeps on giving lately. I mean, talk about a beautiful chart. Popping back up out of the channel yesterday. I mean, we could go on an epic run here. Now, is everybody aware of the catalysts that are coming in Bitcoin? There are some catalysts. We have a spot ETF coming up. Now, there's a deadline, the first deadline for ARK. ARK was the first one to get the spot ETF application in. What is it? Grayscale had their conversion and got rejected. They wanted to convert from the trust to a spot ETF, and they got rejected. And then they sued the SEC, and the SEC lost the case. But they denied that application, wrongly. Didn't whatever the reasons, didn't give it their full review, and maybe wrongly denied the application. So they're taking a serious look at all the other ones, and ARK is the next one. They have a final deadline. That means that the SEC is either going to approve it or deny it January 10th. That's the big blue line right here, January 10th. So this is a huge catalyst coming up. We're in kind of the next 3 weeks or so. We have this potential that it's going to get approved before that. Now, there's wide speculation that BlackRock, Fidelity, Bitwise, Invesco, all the ones, including ARK, are all going to get approved at the same time, so nobody has a head start. I mean, seems fair, but since when does the government do anything that's fair? Right? There's like 9 of them set up in the queue. I think 4 of them already have tickers assigned through DTCC. That's the clearing corporation, digital whatever clearing corporation. And the tickers are already there and active. They're just not trading yet. So, where does this leave us? Well, the deadline for Fidelity and BlackRock is January 15th. That's the final deadline. So we're looking at, right here, we're coming up. The 10th is right there. The first full week of the year for trading. That's the second week, if you want to look at it that way. This will be an abbreviated week, closed on the 1st for New Year's. And then we have the 10th right here. Then we have the 15th right here. So those essentially, we'd have to have a decision here and then here. And I think they just blanket approve them all at once. I mean, it kind of makes sense to me that why would you approve one, approve a couple more, approve a couple more? And BlackRock's been negotiating almost daily meetings with the SEC to try to get this all the final details hammered out. So there is some serious effort going into getting this all like smoothed out. And BlackRock has a unique thing they've added to theirs where they can have approved traders participate in their ETF. And that would include like Bank of America, JP Morgan, Morgan Stanley, big banks that aren't otherwise allowed, to hold crypto on their balance sheet, but they could participate in the ETF. So that's an interesting development there. That opens up like upwards of $1 trillion more dollars that could flow into these ETFs. It's been widely speculated that we would see around wrong button. Yeah, coin market cap. That's the one I want. It's been widely speculated we would see around 10 to 15% of this market cap sucked up immediately. And really, it's the liquid Bitcoin, which there's not a great way to put a finger on the liquid Bitcoin at this point. 10 to 15% of that just gets snatched up and locked up forever. Immediately. So it's not about Jamie Dimon. I mean, if there's big money to be made, he'll definitely be interested. I guarantee you. So there is the potential that this thing pops and makes an all-time high right on the back of this approval. We're talking right up above this 68, 67, 69,000 area right there. There is a potential that we see something crazy like this right into that approval, whatever it is, and it could go all the way up and tag that 1272. That would be way ahead of what I'm thinking. Now, the second catalyst we have coming up is the halving event. You've probably heard me mention this if you've been here, if you're brand new. Bitcoin's going to have a halving event. It's coming up in about 122 days. That's where miners, the people that validate blocks, you've heard of the blockchain. Well, that's the ledger. The people that validate blocks, people like Mara, Hut, Riot, the miners. All right. All they're doing is validating blocks. And the block reward, the reward for minting one of these blocks, is cutting down from 6.25 down to 3.125. That's a big change. That's a lot less liquidity hitting the market. And you're like, well, the follow-up question is always, well, what happens when we run out? When we hit the 21 million, right? We're gonna hit that really quickly. Guess what? With the halving events, the way they're gonna play out, it's gonna be about 150 more years before we get to the full 21 million. So if 150 years is in your plan, stick with me. We'll talk about it when we get there. But right now, that's a long way down the road, and a lot of us should be so lucky to live that long. So there you go. Running out of Bitcoin supply is not something that's going to happen anytime soon. We're going to keep mining. The miners are going to keep being, rewarded in Bitcoin for quite a while. 100 plus years. But it's going to be declining every roughly 4 years. It's as we had up a second ago. Every time we hit the halving level. And for whatever reason, I can't remember. It's like 120,000 blocks or something like that, which works out to about every 4 years, roughly. The last one was in May 2020. This one's going to be roughly 122 days. So we're looking at 122 days from now. We can zoom it up. It's roughly going to be April 19th. I think if we just double check it, triple check it, we almost check it daily. 122 days. Yeah, so right now, coming in a little shorter. Looks like, well, no, yeah, April 19th. It's kind of firming up. As we get closer and closer, it'll firm up, and we'll have it within a couple hours here. Roughly a block takes about 10 minutes to get minted, mined, and that's millions of computers guessing. How does it work? They crank up the difficulty, and it gets adjusted every 2 weeks. So you have have trillions of these miners, and trillions of calculations trying to guess the next block. It's all based on guesses. Could you have 2 blocks that get mined seconds apart? Yeah, you could. It occasionally happens. All right. So at halving, we typically start an epic run. So anybody remember 2020? And back here in May of 2020, we had a drop before halving, but right in May, right, I don't remember the exact day. I think it was right there. Maybe it was the day before. It was right in there, right about there. Look what happened in the coming weeks and months after that. And in 2016, we didn't have futures. I'd have to go to a all-time price chart. So there's the halving right there. In 2016, we had the halving right here, roughly July 2016. Look at the run. Doesn't that look a lot familiar to the run that we saw in 2020? What do you think is going to happen in 2024? We're already on an epic run. We may see this pull back into that halving. It's actually in the wrong date at this point, April 19th, roughly. We may see, this is the other potential. We see a pop, and then we see an epic drop into that halving event. Look right here. We had an epic pop. It happened early, and then we had a big drop in right before the halving. And that was a deep one, like 90%. We went from the high here all the way back down. Now, we didn't make a higher high here. So that would be interesting if we did make a higher high. But that lost 70% of its value. A lot of people thought it was dead going into the halving. Turned out that was a huge buying opportunity. Is it going to play out that time this way yet again? I don't know. The odds are pretty good. We get a lot of excitement around halving. All right. So anyway, I just want to talk about that and the potential catalyst coming up. Could be the gift that keeps on giving right on through the new year. If we go up, make a new, if we get up in that 100,000 area, that 1272 extension right over here, if we actually hit that, watch out, baby. I think we can come right back down to the roadmap line very quickly, find support before we go on the next move. So that would be the one case where I'd probably liquidate most of my position. My mind out Bitcoin, I'll probably just sit on it. That's long term. That's like 20-year hold or whatever. But most of another thing that's got me, that caught my attention is yesterday I noticed that they had strikes they had added to Mara all the way up in the hundreds for the next few expirations. Mara announcing they're buying some facilities. They've worked the deal, and there's the roadmap pattern playing out. 70% likely to hit this 23 area, about 40% likely we hit 27 without getting another pullback. Could it keep on ramping? Yeah, I mean, we can climb right on up. The fib levels go way on up here, and potentially all the way up to 100. And we got 140 up here. So could it just keep climbing that fib ladder? Yeah, sure could. Odds are probably going to slow down 23, 27, maybe get another pullback before we go on the next run. So yeah, something like a 50%, 50+% capacity increase for Mara. They're sitting on a ton of Bitcoin. Not like MSTR levels, but a ton of Bitcoin. So just be aware. These things are coming. Now, S&P 500 continues the grind. Do we just grind right on up here through the beginning of the year? Quite possibly. It's going to set us up for a wicked pullback. And as I was just sharing with Goose a minute ago, I think the Mike from Morgan Stanley, one of the biggest bears in the market, went bullish. That's like when the final bears get bullish, that's the rollover moment. All right. Yeah, we were talking about the fear and greed index yesterday. Cranked up one more notch. We get up here in the 90s. That's usually, we're just a matter of days, maybe a day or two. Usually we hang out in the 90, 100 area before we come winding back down this thing. So that's yet another one to keep an eye on right there. And S5FI hanging out at the top. We don't spend a huge long time up here typically. 15, roughly 3 weeks-ish. It's about as long as we hang out up there before we start actually coming back down. Yeah, look at all these things are crossing. I have to look at, I think FSLR was on the list. Yeah, right there. We'll look at that one in a minute. So that is, I mean, we popped up here right there. 15 days puts us on December 21st. Look at that. What's today? Today is the 19th of 2021. Watch out. All right. Be careful. We don't typically spend much longer than 3 weeks up here before we start coming back down. The stars are aligning for a correction. Yes, climbing on up. We might make an all-time high. We might. Look at that. It's not far away. That's pretty crazy. S&P 500 still has a ways to go. We're going to have to be up here around, I can't remember what the all-time high was. Zoomer up, Buttercup. I think I had the number memorized, but I don't. Looks like 48.18. All-time high, 48.18.62. So we may see that pop pretty, I mean, it's not that far away at this point. 50, 60, well, 70 points away. 70-ish. We can do that in a day. We've done that in a day, not too long ago. So be careful. Betting against this market, but also watch out. All the things are getting, all the things I keep up with are cranking up to 11. It's usually what happens right before we get the rollover. Everybody gets bear, everybody gets bullish. There's no fear in the market. There's no reason to, doubt that we're not going higher, and then boom, everybody gets ripped. So watch out. Russell, I came in long to this morning. My platform apparently left a ticket that didn't get canceled at the broker long at 2012.6. I mean, there's worse things that can happen, I guess. So, and a little bit of red here in the hourly. It's going to stop me out. I don't know. I put my stop somewhere right about here, I think, before I came on live. Long 2012. I locked in a couple points, profit, and my target. I threw the target up here at 2050. So if we go up, I'm going to make a nice chunk of money. If we just rip higher today, we'll see what happens. If this crushes back down, I make a few bucks. It's not awesome coming in. Like, you're like, oh my gosh, how did I get long? Yeah. CL looking like it's going to try to break out. Tried yesterday, rejected. Looks like we're going to try again today. If we can break out, game on. And, funny enough, I drew that off the morning high. So that's just like a parallel channel brought over. It's almost exactly, not perfectly because I don't draw perfectly. And TradingView kind of skews it a little bit, but we have that right there. And if we break up through there, we're going to come up here, retest this, break up through there, and it's game on for oil. I saw a algo positioning chart yesterday. Algos are actually short oil on the latest report. They were crazy long oil right here on that report. And guess what? We got a giant pullback. So that was the big trade from back here in May. They started loading up right here in the summer. By September, they were all way leveraged long. And you know what happens? Well, computers love to rip each other, so they ripped it right back down. Now they're net short, so it's likely we're going up. When everybody tips the boat one side, when all the algos are doing the same thing, we do the opposite. I mean, that's just the way it works. Most of the algos are long the market, so we'll probably do a pullback. It's just a matter of time before it actually gets going. So, it's stay with me long enough, you'll hear me say it. Oh, hey, say that same thing over and over. Gold looks like it's about to break out. We get above that high. Excuse me. Strawberry Monster talking back to me. We break out above that level, 2060. It's game on. Now I bought a 300 GLD call out as far as I can go. Put $2,000 on it, like buying an ounce of gold, and just gonna sit on it and see what happens. If I lose my 2,000 bucks, be okay. This thing has a pattern. Move up or retrace. Look at this. And just zooming out a little bit. Just look bigger picture. This is kind of a theme today, I guess. Bigger picture. That was not a perfect measured bounce, but it did hit the minimum. The 50% retrace, that's the minimum qualification for a measured bounce. It's not as awesome as if we had gotten the 618, but yeah, this can put it up in this 250 area on a next move, and possibly 250, retrace, and then a leg on higher. A leg on higher could be something like, if we were to retrace back to here, it could be up in that 270, possibly 300 area. Yeah. Now, how does silver look in context, you say? Is the question. Not as awesome. We didn't make a higher high. We didn't so gold right here made right up in those highs, right? We topped out here, we topped out here, we topped out here, we topped out here. We were pushing that all-time high area. And if you look at GC1, we actually made a higher high on the futures. But then SI, we're not. We're actually making a lower high every time. In fact, that high was lower than this high, lower than this high, lower than this high, lower than this high, which happened to be higher than that one. So we're on a downtrend in silver. This is like winding up the clock though. Eventually, and we may need one more swift flush to clean up some of this before it really rocks higher. I don't remember what that alert was. Oh, look at that. Upwork breaking out. 17 is the target. I wonder why I'm getting 2 alerts on everything. And that one is a measured bounce, so it could very well go significantly higher than just the conservative targets of 17 and 19. Could be heading up here to 28, possibly 38. May need to add some here in a little bit. I'll think about it. And Bitcoin we talked about, we kind of led that. Now Ethereum, not as awesome here. There's no big catalyst for Ethereum except that it rides along with Bitcoin usually. But they did something. They fundamentally changed it back here in September of last year, not this year, September last year. And it's kind of been sideways a little bit. And if we stop at this 618 retrace right here, if we even got a little higher and stopped right there in that 618 retrace zone, we could do a significant drop back down to 500, even 350. Highly cautious on Ethereum right now when I saw this kind of setting up. Either this is a nested setup for going higher, or this is a corrective move up and we could get an extension lower. Dollar is testing that trend line again. We get below that low from a couple days ago, probably coming back down to this low. If we get below that low, we're going to the mid-90s. My target I've had. Simple as that. VIX up 3 days while SP is down. VIX up 3 days while SP is up. Yeah, I mean, like VIX. Hey, there's traders that aren't dumb, all right? But up is all relative. I mean, look, up 3 days. It's red today already. But that was epically low, and it's in the reversal zone. Now, it does not go to zero. Like, it just doesn't. Like, that's not the way the market works. Some of the prior lows down to, 850. But we're basically at the resting level here. Historically, if you take all the VIX action forever, 20 is the resting rate. And we're significantly below 20. So there's a high likelihood we pop this in the coming weeks. I'm long like some February. 3rd Friday in February. Pop up my calendar real quick and come on, calendar. See what the 3rd Friday is. I didn't put it on the right day. Let's see. 3rd Friday would be the 16th. Let's see if I can get that on the 16th of February. Probably have to zoom up a little bit. Right there. That's the right day. I'm long $14 strike calls on the actual index. You may be like, I can't buy VIX. Try dollar VIX in your platform, or type in VIX, figure it out. Dollar VIX, .x, whatever it is on your platform. Could be, I'm not saying buy anything because, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, education, fun, and entertaining. It is not a recommendation to buy or sell anything. No stocks, no options, no bonds, no futures, no forex, no cryptos. Don't buy them, don't sell them, don't long them, don't short them. And don't buy stuff from gurus if you don't trust them. Like, don't fall for some marketing hype, all right? Make sure you trust the person that you're watching, all right? I guarantee you their limited time offers aren't that limited time. Having done this for a while, you can probably get the price, unless they're saying they're only taking 10 people, and then it's a lot of times it's 10 people per day or something like that. But most of the time you can get the pricing. It's not that limited. Anyway, if you desire personal financial advice, hire and consult a financial advisor who has a fiduciary duty to give you advice if you need it. It's not what I'm doing. I'm not advising you to do anything, just pointing out some stuff. VIX is likely to pop. I have $14 calls out to February. You can see this epic drop. We tend to bottom in this zone. We're a little lower than we were back here in September. We're a bit lower than we were here in July. You can see July, June into July, we hovered for a little bit, a little pop in between. If I had bought the $14 calls there, probably sold them out. That's when we got up to 17. Drop back down, buy them again, sell them out. Drop back down, buy them again, sell them out. We don't tend to hang out extended periods of time without at least a little pop. Now, if we do pop, it's time to book the profit. Don't think that, it's the next chance here. Continuation is not one of those things that VIX usually pops up and comes right back down. Pops up, comes right back down. Pops up, comes right back down. Only occasionally do we get one where it goes and we spend a prolonged time elevated. But that's still decline, pop, decline, pop. It's taken us a while to burn off that COVID pop in VIX. But here we are, finally back down to the resting area. And we haven't really been down to this level since pre-COVID, 2019. Do another pop. And even pre-COVID, we got pops. So back here was the trade, the awesome trade was anytime the VIX popped at all, sell it, sell the crap out of it. And then we got the flush out. I have a couple of those just kind of sitting, and SVXY is when this thing drops, and look at that, right up to the target. Dadgum, man. Maybe I should have held on. At least a couple contracts. Crazy. It's starting to turn back down a little bit. Watch for that one. If it gets a 10 to 15% drop off of those levels, or I guess 15 to 20 really. 15 is kind of the magic. That's where I like to see it. If it touches the roadmap line, that's like, oh yeah. If you want the roadmap line, link is in the description. But every time since COVID, it's happened like 15 times in a row here. Almost every time since COVID that we've done a 15, 20% drop, we bring it right back up in the about 45 days following. So keep an eye on that 15% drop on SVXY. We get a 15 to 20%er. Time to go long. We'll probably take it right back up. Now, I bought here, and I tripled up down here, and then made 20 grand as we popped up higher. Does it always run higher? No, it doesn't always run higher. I mean, sometimes it comes up just near the top, and then we do the double dip. Right up near the top, and dip again. So it doesn't always do an extension, but it almost always comes right back up near the top. Some of them were really fast, like that one, and pop right back up. 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 That one came up most of the way, didn't make a higher high. That one came up most of the way, didn't make a higher high. That one came up most of the way, didn't make a higher high. But then that one, higher high, higher high, higher high. 22 was if you didn't know, 22 was a rough year, and volatility increased a little bit as we flushed down the toilet. All right, what's actually moving today? Hit a few highlights before we wrap this up today. MedTech, as I always say, be careful. This is like, glorified gambling on MedTech. That popping up to 500. Guess what? Probably coming right back down. MSTR. Just churning right up here at the top. One of these moves is likely to be the top, and then we're going to get a flush back in MSTR. Could it extend right on up to the 800 prior high? Sure. If we get that crazy pop in Bitcoin, it could even make higher highs. Square. Go, baby, go. We see that get higher than that high right there. Cold is climbing and dropping. And cold is a very leveraged natural gas short. That means natural gas is dropping while cold is popping. So NG1. I always go to the underlying. Don't just stay on the chart. Yep. Thought we'd find resistance and continue down. I think we're highly likely to go visit the bottom of this box. We set this range back here in February, March of this year in just a few days, and we've been trading mostly in it. We tried to break out and failed. Tried to rally here, failing again, keeping the downtrend line intact. Then we're likely to go revisit the lows. There is somewhat of a floor in natural gas because it's not going to, probably not going to be cheap and free since we use it to generate electricity. But never have. And wouldn't surprise me if we went back down to the bottom, right down around 2. ENPH, right up to the roadmap line. Watch for the resistance. If we turn back down, we're going lower low. At this point, that looks something like 63. Possibly that 618 at 51, which is confluence with the prior pullback. So watch for that one to break back down below this zone. If we can break up here, retest the roadmap line from the top, we can start talking about long. Way premature right now. Duolingo. Crazy move. Could that climb to 279? Sure. Is it looking like we're going to get another retrace here? Yeah. Probably. We're due for one of these. And that may click the right button. That may come and hang out right in that vicinity right there. Could gap fill. Unlikely. We could retest the prior breakout point. But probably going to come down at least in that vicinity. I mean, whether we do it now or from up here, I don't know. Could rally higher as the market pushes on up. ALB, yeah, it looks like we're going to come back up to the roadmap line. Retest it from below. We have resistance right here. This is a domestic U.S. lithium play. FSLR. Looks like that one's breaking above. That head and shoulders didn't work out, so now it looks more like a upside down Batman. Oop. See that? Yeah, upside down Batman there. From cat ears, whatever you want to call it. Bat ears, cat ears. It's not a pattern. It's just Wall Street Bets talks about the Batman pattern. Usually it's a topping pattern, potentially a bottoming pattern, and yeah, we could rally back up. I don't know. I wouldn't mess with it until we made some kind of rally, some kind of retest back on the roadmap line, and then turn back up again. It's just the pattern I look for. I don't just go farting around with things that I've lost money on before. LABU. Reverse split, which is not typically bullish. Be careful. The leverage on this one is obviously eating it. Just because it's up doesn't mean it's not going to continue this big downtrend that we've been on. Biotechs take a lot of money, and money is expensive right now. And that's why we've seen this decline. And we're probably going to continue to see this decline. We're coming right up into the trend line. This is probably maximums, and then we could probably see this push on lower. Nail. keeps on rocking with the housing, with the break in interest rates. The mortgage rates actually took a dive in November, and we actually saw a lot of housing get sold. People jumping on, fear of missing out. Like, oh my gosh, what if interest rates go higher? And people have been waiting. They jumped on their houses in November. SQM still bearish below the roadmap line. TARK. That's got to be some kind of, so like a play on ARC some way, somehow. Like an ETF. A 2x, yeah. Leverage exposure to ARC. There you go. ARKK. Yeah, because that's probably, like, there's been an epic buying of garbage, meme stocks, and I don't know, whatever you want to call them. It's been a epic loading up. That we usually see that right before or in the tops. We usually see people, irrational buying of garbage into. Everybody's like, the garbage is going to work this time. Guess what? We're in a different environment, and we haven't had the big flush out. DPST stalled out right there. I'm not convinced. We're going higher until we fill that gap and get above, above there, retest the roadmap line, and start moving on up. The roadmap line is still pointing down. Starting to arc the bottom a little bit. Is it just like over here, though, where we arced a little bit and then flush? Not convinced until I get more data. Coin pushing higher on crypto's relentless march. We could just blast on off. Like, I made quite a bit of money and stepped off of this one. And at this point, it's the risk is bigger than the reward for me on coin. The reward was bigger than the risk down here. Now, not so sure. Could we go back and make all-time highs? Yeah, sure. This could have been the bottom and could be all done. And coin could never look back. But during a tough industry, the SEC just denied their, I guess, petition for regulation of their industry. And I don't know. We'll see what happens. We'll see what shakes out. LMN probably going to come up and retest the roadmap line. TMF breaking above the roadmap line. That's interesting. 3x bulls on the treasuries. Probably, if we're going to continue this path, probably do something like this, maybe right up into that resistance. Then maybe get a retrace, hold in that area. And maybe that would be something I would look at. But playing treasuries has not historically been something I do. So ACN, popped right up to the 1618 vicinity. Remember, these are always fuzzy zones. They're not perfectly defined lines. I always say they're like, there's a little bit of fuzz to them, and that can retrace back to the roadmap line. That could be all she needed right there. NVIDIA still getting a pullback, 1.5% today. Saw the pre-market. We came up right at the prior high there. Getting a pullback. Is that just one of these little dojis and then we go higher? Not sure. But that was a bullish retest, and I think we're kind of likely to go test that 530 area, if not on higher to 570. So it's kind of somewhat high probability we do that after retesting. We didn't do a double tap. We didn't break down like the dollar's doing. Yeah, same pattern we had on dollar. We tested, moved up, bounced again, bounced on the third time. When we get below here, watch out. That's not what NVIDIA is doing. So NVIDIA is actually kind of retested and moving up, retesting the highs. And if we push on through, we're going on extensions. SMCI, nice move up, made a higher high. Still not bullish though. That's still not a bullish pattern. That was the low. That's a 3-wave up. Could we go on an extension? We could. This isn't one I want to mess with. It could be a measured bounce. Has that kind of potential there. Could take us up to 365, maybe 400. The downside risk is bigger than the upside potential for me on this play. Could you make a bunch of money? Sure. In VDO, you could probably make some money on a pop higher. There's no real pattern here. That's kind of gone sideways for a couple months now. Almost all since the summer, almost 6 months now. Don't see huge upside there. Oil. So NVIDIA is closer to a long-term top than it is an opportunity to buy. I bought when it was at like 150. I bought shares. I bought some options. I sold when we got to this vicinity right up in here, right around 300-400. Maybe I sold before the gap up. I think I did. I think I sold at 320 or 317, right in there. And I'm just waiting because this looks a little ridiculous. All right, this is extended to the upside. The risk is great for a pullback. You got to shop where nobody else is shopping. If everybody's talking about NVIDIA, the odds you're going to make a ton of money are lower. If you're, I was looking at NVIDIA when nobody was talking about, not many people are talking about AI and stuff like that. So, Boyle, ultra long natural gas, probably still going to go lower. EGGF. SPAC, pop up, drop. That's just nasty. Sony, watch out. That's a potential measured bounce from the top. I mean, measured bounce to the downside. Takes down here. 75. Has that kind of potential. Is it definitely doing it? No. If we get up here above that prior consolidation, this high at 95, it flips the odds that we're going on up here, 106, 110, somewhere up here. So it's kind of a coin flip. Do we go up to 106? Do we go down to 75? It's like a $14 upside, $20 potential downside, or 14. Oh, actually $16 downside, $14 upside. That's kind of a coin flip zone. And the pattern looks kind of gnarly, so not sure which one it might do. Could be bullish off the low, but that could also be just the first wave down, retrace 1, 2, 3, 4, 5, and could make a lower low than we have right here. That potential still sits out there. SRTY, ultra short Russell is going to plummet as Russell pops. I'm going to continue pop up. This is a leveraged, be careful on leverage. It's a leverage and a short, and be careful. Leverage cuts both ways. Lots of questions as to why NG doesn't follow oil. It's while oil and gas, so natural gas is kind of like it was a byproduct of drilling for oil. Now it's kind of like we drill for natural gas and drill for oil, and natural gas has become valuable. But there's a lot more natural gas available than there is oil, and we're actually producing more than we can use. And that's like the supply side it's almost down to supply and demand. There's more supply than we're using, and like we're not sending it to Europe. And it's not like we have a pipeline to Europe to pipe it over there. We have to put it on ships. The U.S. doesn't make ships to transport natural gas, so we can't send it from one port to another here in the United States. We have to use pipelines domestically. The Biden administration shut down all the pipeline construction. So that creates an oversupply in areas where we have it and a glut. So you have locally high prices because you can't get the gas there because the pipelines don't support it. But then, so you have competition locally, especially like up in the Northeast, out in California. There's very few pipelines that go out to the extremes of our country. A lot of the natural gas is produced in the core, and there's a glut of it. And we're not getting it on ships, and we're not moving it to Europe. Russia's still pumping gas into Europe. So there's a glut. So what happens? Prices stay low. It's just kind of a supply and demand, even though I don't look at the fundamentals like that necessarily, but the chart pattern is not bullish. So it's not, I mean, that was a bullish move. Now we're correcting that back out, and we may actually go lower. And if you look down here, TradingView puts this cool little thing. They don't really expect the futures prices out to, for the next 10 years, aren't expecting a whole lot of price increase in natural gas. So we have a glut of natural gas. We're producing more than we use. We don't have customers for the extra. And the long-term outlook is just kind of flat. Maybe 10 years from now we start ramping, but that's the forward curve right now. And that's that yearly cycle where everybody talks about the yearly cycle of demand. You got the yearly cycle show up in the futures. Yeah. There you go. All right. Bias for the day. Cautiously bullish. Looks like we may go for an all-time high before we roll over here. Be kind of crazy. Just gonna keep on extending that baby. This has been one hellacious move up. I mean, look at this. There's been no correction to speak of, and we're up almost 16% on S&P 500. I'll go hunting for the biggest move we've ever made without a correction. I think 20.5%. I mean, that once we do something like that, it's going to be highly likely we get an outsized retrace. We're talking something all the way back down here. We could be talking 10, 11% correction very quickly. So anyway, 30 minutes of awesome coming up this afternoon. If you got requests, I will take them. That comes up at 5 p.m. and I hope to see you there. I need people there to be able to talk, because I don't have stuff. Then, you know, the show's kind of boring and I wrap it up early. So make sure you come, hit the bell with the notifications so you know when I go long at 5 p.m. Eastern. I'll have the live stream button up soon. Hopefully, usually by 2 p.m. Eastern. And I'll see you guys later.